Hey everyone, welcome to another episode of Getting to the Bottom Line, where I'm your host, Stephanie Smith, owner of New Light Financial Solutions, where we help high earning entrepreneurs make better business decisions by taking their complex financials and creating simple and actionable dashboards. And today it's just me on the show, but I am excited to talk to you about all things profit and profit drivers. So we look at 16 drivers of revenue, profit, and cash flow, and five of them specifically fall into the profit category. And I want to talk through these because I often hear from business owners, I feel like I made a lot of sales, but it doesn't feel like I have a lot of profit. So if that's you and you're thinking to yourself, I know I'm getting sales in the door, but at the end of the day, my P&L doesn't show a lot of profit. I'm going to talk through the areas you should look at and things you should look into to fix that. So before I dive into the drivers themselves, let's talk about what profit actually is. So profit is an accounting formula. It's going to be your revenue minus your expenses, and what's left over is your profit. When you're looking at your P&L specifically, you're going to see two different types of profit. It's going to be your gross profit and your net profit, and I'll talk through those as we go along in the conversation. But now that you know where profit is and we've got that baseline, I'm going to start by talking through the top profit driver that we see in businesses. So that's cost of goods or cost of goods sold. And you might hear this referred to as COGS. So cost of goods, this is going to be all the expenses related to actually delivering your product or service. So your labor and your materials and that kind of thing. A quick example that I like to give when talking about cost of goods is, let's say that you are selling t-shirts and your t-shirt is $20 for sale. So someone will come and buy from you a $20 t-shirt, but under the hood of your business, it costs $10 for the actual shirt. There's cost for the ink and there's cost for the labor, and that totals up to $15. So while you sold that shirt for $20, the cost was $15 and you're left with $5. So cost of goods is really important. We look at it as a percentage of revenue because as you grow and scale, this number will always go up. You're going to acquire cost as you're scaling your business. But if you can really look into this area and save some money here, that's going to make significant difference to your profit. Because if you can go to your vendors and ask for discounts and you can change that $15 on that t-shirt that I was talking about to $10, you just went from $5 in profit to $10 in profit. So this is a great area of opportunity for you if you're willing to reach out to your vendors and look for discounts and ways to save on your costs. The second most common driver and biggest driver that we see in businesses is payroll. So if you have employees, you have a payroll cost. This is not only just what you pay your team, but it's going to also include things like benefits and your payroll software. And all of that encompasses one of the largest expenses that we often see. And this does not include labor that's in your cost of goods. So if you have labor and cost of goods, those people are directly related to providing your product and service. Payroll below that is going to include more of your office staff or administrative staff that don't necessarily provide that product or service. So your office staff or even you, it depends on your business. Payroll is one to watch as well. While a lot of people will cut payroll costs immediately if they need to save money, there are other areas of your business that you can look out for. It's just one you need to be mindful of and watch over time because it's easy to see that you have extra money and spend money on hiring more team members, and that isn't always the best course of action. The third profit driver I want to talk about is marketing. This is the second largest expense that we see businesses spend on, and we also look at this as a percent of revenue. So marketing is going to be the expenses that you have related to your marketing efforts to get people to know who you are. Could be social media ads, it could be Facebook ads, it could be flyers or banners, billboards, whatever it is. You need to be able to tell people who you are so you can do business, because if you set up your lemonade stand in a dark dark alley. No one's going to come and buy from you. So every business has marketing expenses, but it's also another area that's really easy to just spend extra money with your marketing expenses. So we need to be mindful of this. And as you grow, you will likely also see this area of expense grow as well. The next driver that I want to talk about is called all of your other operating expenses. So this is going to be all of the other day-to-day expenses. So we break out marketing and payroll because those are typically larger than other expenses in the business, and cost of goods is its own thing. But this is everything else. So it's going to be your rent, your insurance, your subscriptions, your software, the meals, all of the things that you're swiping your card for on a day to day. And this is where we see the biggest leaks happen in people's businesses because it's really easy to stop looking at how you're spending your money. I would say this is especially true the larger you get and you have other employees making decisions about budgets and what they're spending your money on. So it's important to review your expenses every once in a while. Make sure they look okay. You're reviewing your profit and loss. You're not seeing things that are surprises. And this is also another area where you can cut expenses to improve your profit. So if you see you have subscriptions that you're not using anymore, or you can reach out to your vendors like your insurance and ask for discounts, there's lots of areas in here where you can save money that's helpful to improve your bottom line. The last category is a little smaller, and not many people will have expenses in this bucket. It's other income and expenses. So this is everything not related to actually running your business. The most common that we see in our clients is going to be cashback rewards. We have one client that gets a lot of cashback rewards. He actually reinvests that into the business. Another area that we see a lot is if you sold a vehicle or other asset. So the gain or loss of that. So if you're making money or losing money on that asset, that will show up in other income and expenses. And other things like maybe there was a settlement of some sort, or an insurance settlement that would show up in this category. So at the end of the day, the way that all of these play together is you have your revenue and you subtract out your cost of goods. That's going to give you your gross profit. And then your gross profit, and you're going to subtract out the rest of these expenses, you're going to be left with your net profit. And that's how they all work together. So if you can find areas to improve any of these expenses, you will see an improvement to your bottom line. Now, some common pitfalls that we see people run into when it comes to these profit drivers is one, chasing revenue without keeping up with your expenses. So a lot of people just chase that revenue, they'll go close more deals, and they're not really paying attention to their expenses, and then their expenses start building up and they don't realize they're losing money because they're spending on things that they don't really need. The second one is not really knowing what expense categories are creeping up. So we have a client that spends a lot of money on meals. And this is just something that you might feel like, I'm just day to day, I'm going to swipe my card. But if you're not paying attention, it can add up really quickly over time. So again, you have to be mindful of what's going on in your business and review your numbers. And the last pitfall is really ignoring margins on individual projects or jobs. So I didn't talk about margins, but when it comes to your cost of goods, when I gave you that example of changing from $15 to $10 for that t-shirt, you're improving your margins there, right? So I want to track how much it actually costs for me to provide my good or service. And I want to be really mindful of what those margins are because I have to make money at the end of the day. The whole point of starting your business is to make money. And we actually have had clients come to us who aren't tracking cost of goods at all. And then you would never really know if you're making money when you're selling your goods and services, or if it's costing you. So it is possible that you're selling that t-shirt for $20, but it costs you $25, and then you're negative on every sale of the t-shirt. So you need to track these numbers. So if nothing else, I hope this was a helpful overview of what's impacting your profit in your business. Every business is going to be different. Everyone tracks things a little bit differently, but I want to encourage you to review your finances. Spend time in your numbers. Even 15 minutes spending time in your numbers will give you clarity that you didn't have before. And that's exactly why I made my Think Like a CFO worksheet. It outlines all the drivers that we look at in buckets of revenue, profit, and cash flow and helps you outline where you're spending your money, where you anticipate to spend your money, so you can see where your cash is going in your business. I'll drop a link below in the description if you want to get that and start using that today if you're not doing anything else to help make better business decisions for your business. That's all I have for the show today. I really hope this was helpful, and I can't wait to see you again on the next one. Bye, everyone.